Hey everybody, Mr. Prez here, back for another episode of the Daily Dip. Today's feature is going to be a little different than what I have been doing in the past. Today we're just going to be talking about some of my favorite tools and resources that I like to use when I do my homework, for the options and large caps that I trade. So quickly, getting right into it. First one I like to use is barchart.com. This one is 100% free. They do offer a premium service like most websites do, but the information that you get just, from the free version alone is pretty invaluable. I like to, they have stocks, ETF information, options, futures, currencies, everything, Forex. So I like to focus on the options side of things. And just right here you see options market overview, unusual options activity, changes in volatility, highest implied volatility, option screeners. So I like to, they even do spreads, they have information and data on all sorts of advanced spreads. So I usually like to go to the unusual options activity. And if you pay for the premium version, you can do some of their advanced screeners and this and that. I like to usually go to the volume slash open interest ratios, the implied volatility, and just kind of see what people are speculating on. So if you sort by open interest, you can see, all the big boys, DraftKings, Tesla, Boeing. You got some calls, unusual call activity, lots of volume, high open interest on these specific strikes. You can even, I think, download historical data, like past data, for free as well. So yeah, that's bar chart. Bar chart, for costing zero money, provides an insane amount of data for free. My next resource that I like to use is from yumpu.com. Um, it's an Elliott Wave kind of cheat sheet book. I'm not very good at Elliott Wave yet. I do like to practice it kind of on the side. So this tool right here is an amazing way to make sure that all your conditions on your Elliott wave are being met, and it kind of helps you get an idea of what a condition could come next based on what you're seeing in your wave count now. So this is 8 pages. It works like a little ebook. It goes over wave 1 through wave 3, wave 4, wave 5, and all the conditions that go along with those. It gives multiple scenarios of what could happen in each wave and what it means, what it implies, you know. So this has been pretty invaluable for me as well, and it's 100% free. All right, so that's yumpu.com. I'm not sure the exact thing. You have to search pattern and practical Elliott wave analysis cheat sheet is what it says up here. So I'm sure you just Google that and it'll pop up. This next one is actually I got from Ripster, which I'm sure most of you know the name Ripster. He showed me this website quite a long time ago, but I use it almost every day. Sector Tracker. So this keeps up with all the major ETFs in the S&P, XLC, XLY, XLP, energy, financials, etc. So what you can do with this is a good tool to kind of help visualize the rotation in the market, kind of see where the big money's going. And you can see the time frame, 1 day, 5 days performance, past month performance, all the way up to 5 year performance. So what's cool about this is that you can actually click the ETF that you're trying to look at, and we'll look at technology, and you have all these criterias on the right side that you can sort by. So you can sort it by index weight. You can see what moves the ETF the most. Apple has a 24% weight, and Microsoft has a 20% weight, and then Visa surprisingly has a 4.4% weight. You can sort it by, the change, the percent change. So this gives you an idea of, you see where all the money's going or all the money's leaving. You can try to find those topped out plays, those bottomed out plays. Once the money starts rotating in and out of those sectors, you can use this to see which tickers you need to hop into to take advantage of that rotation the most. The next one is going to be Black Box Stocks. This one is a paid subscription. This costs $99 a month, and there's a yearly option available as well. This I mostly use for option money flow. So if you go to the options tab, right in the middle of the screen, you have your options flow. This will tell you how much is coming in. You see Tesla strike 450 put sweep. So that means people are buying all these puts at the ask for about $250,000 worth of premium in that order itself. So if you have a specific stock you're watching, like I'll do Oxy because I know they were pretty bullish yesterday leading into today, you can kind of see this chart right here. This is the open. We opened at 1075 and we're up almost $1. And you can see all this flow coming in on Oxy for these $12 strikes. You know, $148,000, $46,000, $38,000. All this premium is coming in. So it helps you, it gives you conviction behind your trades a lot of the times. You have most active calls, most active puts, bullish flow, bearish flow. This is all about seeing where the money is going. And if you follow the big money with options, that itself is an entire strategy that is completely viable. I've met many people that make all their money just following option flow. Black Box has its own Discord, support Discord. They have great mods. Their staff is really attentive to their people, and they're just an overall pretty good company. The last website that we're going to talk about real quick is called tradingvolatility.net. More specifically, you have to put stocks.tradingvolatility.net. But the amount of data that you get from this website for free is insane. This guy should easily be able to charge 100, 200 bucks a month just for this data. So the main thing that we're going to be focusing on with this website are the tools, the tab, more specifically the GEX dashboard and the dark pool dashboard and the max pain levels. So real quick, if we go over to the dark pool dashboard, this shows you current dark pool values. And this website is always updated at the end of a market session, about like an hour and a half to 2 hours after the market closes, so it can gather the dark pool data. So DPI simply means dark pool index. Higher DPI values represent stronger dark pool buying. So what I like to do is I like to sort by DPI, and this kind of gives you a overview of which tickers institutions and big money might be accumulating. So if we click on Twitter, for example, it'll bring you to a visual chart on how you can see what the institutes are doing. It gives you its moving average. It gives you a 10 EMA for the dark pool, and you can just see even to like look at yesterday, crazy amounts of buying on Tuesday. So you get a visualization of the dark pool activity, and you also, if you scroll down, they have it linked with TradingView, so you get upcoming earnings, EPS, market cap, and you get an entire financials balance sheet. So the dark pool index is like a really insane way to get a watch list together and to kind of see what kind of stocks might be being accumulated by institutions. And so the next thing we're going to be going to is the GEX dashboard, which is really hard to explain if you're not familiar with the idea of gamma and gamma exposure. But the three values that we're going to focus on are SA GEX, call skew, and GEX dollar per 1% move. So think of GEX as market makers have to constantly balance their options books. Market makers make most of their money on the transaction fees, so they have to keep all of their books as neutral as possible, delta neutral, all that, um, for lack of a better, explanation. So, gamma exposure is the dollar value of all the speculative calls that are currently open. When you have a high GEX value, this is implying that market makers are buying calls and selling puts. So that's like a borderline bullish scenario. So high GEX values is basically assuming that market makers are buying calls and selling puts. Skew adjusted GEX, they have a quick explanation on everything down here. Positive skew adjusted GEX daily movement subdued as market makers rehedge by buying as stock falls and adding to shorts as stock price rises. So the moves are probably not going to be as volatile, whereas if you have a negative skew adjusted GEX, daily movement accentuated as market makers rehedge by buying as stock rises and adding to shorts as stock falls. So how do I use this data to find stocks to trade? So the first thing that I like to do is sort it by skew adjusted GEX. You want your highest negative values because this is implying that market makers are buying as the stock rises and selling short when the stock falls, so it can have that momentum behind it. So what I like to do is sort that highest negative value, and then what we look for if you're looking for a long is you're looking for high negative skew adjusted GEX, and you're also looking for a positive high GEX value. So this is insinuating that market makers are buying calls, and then it insinuates that market makers are buying stock to hedge the gamma exposure for those calls. And then the third piece of data that I like to use is the call skew. Obviously, if you have a positive call skew, that means the speculative call buying is higher and more so than the speculative put buying. So real quick, taking a look at the GEX. Basically, this is the dollars per 1% move that market makers must buy or sell to keep their books neutral. So it makes sense that if market makers have to buy a high GEX value with a positive call skew and a high negative skew adjusted GEX, that Amazon could be seeing a decent move higher. Whereas SPX, you can see we've got this huge negative GEX, which means that market makers have to sell this amount to keep their books neutral by this expiration. So this is today. So then it makes sense because you have the Fed meeting going on today. So you have a -8 call skew, a high negative GEX, and then a high negative skew adjusted GEX. So you put all that together and it tells you that market makers are selling or buying as the stock rises and falls, which means they're going with the trend. The GEX value tells you that they have to sell this amount to keep their books neutral by today, and there's a negative skew value. So this could be telling you that market makers might be shorting the SPX today in advance of this Fed meeting, which makes sense because you've got this cascade down. All this stuff is kind of like Chinese, but if you like take the time to look at it and observe the market, then for the following day after the data has come out, it starts to make a lot more sense. Like I said, everything you need to know about is down here, all the notes, and after that it just comes down to practice. That's it for my feature today on the Daily Dip. Trading volatility is probably my favorite out of all these, just based on the GEX dashboard and the dark pool dashboard. See you guys.